Welcome to this video. We are going to a very interesting topic in this video lecture. So in my book, this topic is named as cost accounts. And this cost account chapter is repeated in the MA2 exam, in the F2 exam, and it is present in the MA1 exam as well. So let's go to this chapter. Why is this chapter very interesting? What makes this chapter very interesting is that in this chapter, we learn about the complete journey of any cost item that once it is entered into the accounting system, then what is the journey that it follows, at the end of which it ends up at the statement of profit or loss or in the statement of financial position. So each cost item, you must remember that each cost item is finally represented in the statement of profit or loss, or if not here, then it must be being represented in the statement of financial position. So this is the accounting system. So it travels throughout the accounting system and ends up in the financial statements. So we are going to understand the journey of it. How does it go into these accounts? So this is what we will do in this lecture, in this topic of cost accounts. So let's go to it. It is in page number, here it is starting. So it is in my notes in my book. It is located in the page 79. So it is present in the page 79 of my book, but I will be making changes to my book. So you might not find it at the page 79. So you can just search for the cost accounts on it. So you will find it. So cost account chapter. So in this chapter, we will learn how the accounts related to costs are maintained in the company's accounting system. So we will learn in very much detail about the all the cost related accounts. So cost related accounts are of 8 types. Here it is real. The description for each of the accounts, each type of the accounts are written. So we will get to it later. First, we have to understand these stages. Very important. These stages are very important, and this just makes the chapter very, very easy for you. So I have just summarized this topic in these stages. So yeah, you won't find these stages written in any of the CCM material, of course, because I just this is my way of teaching it. So in the first stage, we have to just understand first the first stage. So in the first stage, how are the cost accounts are maintained? So you must remember that any cost item, for any cost item, to enter it into the accounting system, you have to enter it in any of these three types of accounts. So you can use material account if the cost is related to material used in production. You have to use the labor account if the cost is related to employees. If for any cost item that you are entering into the system that is related to employee, you have to use the labor account. And for any other cost, you have to use separate accounts for them. You can categorize them as you like. So, for example, you can combine the depreciation expense in a single account, for example. So you can classify them as it suits you. So you can combine utility bills, for example, together in a single account. So you can create accounts for other expenses. So this is the first entry. So first entry for any cost item, you must remember that it is in the three types of account. It could be in material account, it could be in labor account, it could be in expense account. So this is the first stage, very easy. So let's do this question. Gamma Go, it is numbered as question 6 currently. I might change it later. So Gamma Go, the name and data will not change of this question. Gamma Go, opening balances are on hybrid accounts are. So what are the hybrid accounts? So going back to these accounts, the first three accounts, material control account or purchase account, this is the account that gathers the cost of materials purchased for use in production over the period. So it gathers the all the cost that you have purchased, that is related to the materials purchased for use in production in a for a period. So all the costs are gathered in this account related to materials, and then there is work in progress account, which gathers total production cost for a period, and then there's finished goods account. Now just note this, that all of these three accounts are asset accounts, are inventory accounts, because material is type of your inventory, right? And work in progress is also a kind of your inventory, and finished good is obviously also a type of inventory. So these three accounts are inventory accounts. So you must remember that these three accounts are also called as hybrid accounts, meaning that they perform both the asset function and expense function. right? So these are assets accounts and also expense accounts. The last three of the accounts, production overhead, operating expense, labor expense, and cost of sales account, these accounts are pure expense accounts. So just a little thing that you have to remember that these first three accounts are hybrid account that perform both the asset function and expense function, and the last and the all the other accounts are pure expense account, meaning that they do not perform the asset function. So opening balance is obviously material account is a hybrid account. So obviously there must be an opening balance to it. So opening balance is 2000. So opening balance is present on any of the asset account. So any asset account you there must be opening balance. So work in progress, there is opening balance. Finished good, there is opening balance. So now let's move to the transactions. So the first transaction is but machinery was purchased for 50,000. So let's start the double entry, doing the double entry for it. Or we can just first start by making T accounts for the hybrid accounts for which opening balances are given. So material, so it is opening balance. I can write it as OB, and it is 2000. So I'm assuming that you guys know the basics of double entry. So you have studied the FA1 subject. So because if I start by teaching the double entry, then it will just become a whole new topic. So that is why I'm not teaching the double entry. I am assuming that you guys already know the double entry and making of the T accounts. So opening balance is 2000, and then there is work in progress account. We have to make that also. So on the work in progress account, or I can write it as WIP, the opening balance is 2200. And then we have the finished goods account. And for it, the opening balance is $4,000. So we will be doing the double entry, and we will be updating these T accounts as we are doing the question. So let's first start with first transaction. So first transaction is about the purchase of machinery. So machinery is obviously an asset. So you must remember that the expense is not recognized whenever you purchase a non-current asset. So machinery is a non-current asset, so that is why expense will not be recognized for it other than depreciation. Depreciation will be recognized as an expense. So this depreciation is cost, but machinery purchase is an asset, right? So we will debit the asset account or machinery account, you can say, and then credit our other asset has been decreased, which was the cash. So 50,000 by the equal amount of 50,000. 50,000 and 50,000. We can name this column as debit and this column as credit. So let me just edit it a bit. Yeah, right. We can just put a formula for it. So debit must be equal to credit. So the value of the debit must be equal to credited value. So that is why I have just put in a check here, so we don't make a mistake here. So let's move to the other transactions. So I believe you must have remembered this transaction from your FA1. So of course, whenever you purchase a machinery on cash, then this is the transaction. This is a double entry for it. So let's move to the second transaction, and that is material bought for 12,000 cash. I believe this must also be a transaction that is familiar to you in FA1 exam. So what is double entry for it? So material, our expense, or you can say our asset is increasing. So that is why we are debiting. If I can just write the rule for the double entry. So it the way I teach it is dead click. This is not my subject, so I just teach it the way I learned it. I don't do any special efforts on it like I do in management subjects, obviously. So this is just a very easy, convenient way to teach it and learn it. So debit, asset, expense, and drawings, and then there is credit. So this is the debt. This is the debt, right? So D for debit, E for expense, A for asset, D for drawings, and then we have the click. So C stands for credit, L stands for liability, I stands for income, and C stands for capital. So you can remember it like this. So dead click. So what does this mean? You have to remember that whenever upon increasing, uh, upon increasing, upon increasing, you have to remember this that if expense item is increasing, then you have to debit it. If in a transaction an asset item is increasing, you have to debit it. You have to debit the asset account. And if drawings are increasing, then you have to debit the drawings account. Similarly, if liability is increasing in a transaction, then you have to credit the liability. And if income is increasing, then you have to credit the income account. And if in any transaction capital is increasing, you have to credit the capital account. So upon increasing, you have to remember this rule. Upon decreasing, the opposite follows. So I can write this just simply like this as it is. Upon decreasing, opposite follows. Follow the opposite. Now, I thought it would be clear, right? So upon decreasing, follow the opposite. Hmm. So for example, if in a transaction expense is decreasing rather than increasing, if in a transaction expense is decreasing, you are going to credit the expense account. So in this transaction, material is our asset or our expense, you can say. So it is increasing. So obviously, whenever an expense increase, we debit the expense account. So material account is an expense account, yeah, or asset account, you can say. So obviously, we are debiting it. So by which amount? By what amount? 12,000. So in this transaction, of course, your cash has been decreased because you purchased it on cash. So cash has been decreased, which was your asset. Asset has been decreased by $12,000. So why are we crediting it? Because it is decreasing. So if the asset was increasing, then we would have debited it. So that was all. So let's just put this entry in the material account. So how do you put the entry in the T accounts? You have to remember that we are debiting the material account. So we have to use the debit side. Debit side is the right side. This is the right. Sorry, I'm sorry, left side. So debit side is the left side and credit side is the right side, right? So we have so in under second transaction, a material account has been debited. So this means we have to put this transaction at the left side of the material T account. So by what amount? 12,000. We can just write the amount here, 12,000. And where do we write? What do we write here? So in the second transaction, you must note that there are only two account names that are used, material and cash. If we write here material, then it will not make sense. It will not provide any useful information to us because, of course, here would also be written as material everywhere material. So on the top, the heading is also material. So of course, this won't be useful. So we write the name of the account of the opposite account that is being credited. So cash account is being credited. So we will write the cash here. So this is how you post the entries to the accounts. We'll be doing it again and again repeatedly. So you it will get very easy for you. So why aren't we making the machinery account and cash account? You must have this question in mind. So we are not, we are only making the cost accounts. We are only making the cost related accounts, expense related accounts. We won't be making any of the asset account, liability account, income account, because we are only concerned with the cost account. The chapter name is in itself the cost account. So obviously we will be making only the cost account. So in the third transaction, what is the third transaction? It is very easy. 2,000 worth of materials were returned to the supplier. So the transaction would be opposite simply because the material we purchased is now decreasing and our cash is increasing, which is our asset. So Material, debit cash, by what amount? By $2,000. So let's put this entry in the T account. So we are crediting the material account. This means we are going to use the credit side, our right side of the material T account. So by what amount? 2,000, right? And then which account name should be written here? Material or cash. So obviously the account that is being debited now, the opposite account. So cash account. So you can look at here, and you can conclude that this opening balance is like you use this side when material is being increased, and use this side when material is being decreased, or expense is being decreased, you can say. So then now let's move to the fourth transaction. And now this transaction is going to be interesting, a new transaction which you haven't studied in the financial accounting exam. So what is it about? Material were issued to the production department. 7,000 worth of tag material and 2,000 worth of intact material. So this transaction is related to the stage 2 now. So let's read the stage 2. What is it? What is it saying here? So costs from the above accounts are then further classified into three accounts. So it is saying that once you have used the accounting system, once you have posted the entries, the first entry for any cost item into any of these three accounts, material, labor, and expense account. So once you have done this, once you have posted the cost item into the accounting system in one of these three accounts, after that, what are you going to do? For the direct cost item, for the direct cost item, you are going to transfer them to the work in progress account. I repeat, for the direct cost items, you are going to transfer those items into the work in progress account. So, if I didn't told you before at the start, this is how it is going to be looked like at the end of the topic. At the end of the topic, this is how this is going to be looked like. So, all the direct costs are going to be debited to the work in progress account. So, I can just edit it here. Sure, right. So, all the direct costs, you have to remember that all direct costs are going to be transferred to the work in progress account from the material, labor, or expense account. And just make it a bit bigger. So all the direct costs are going to be transferred to the work in progress account from what accounts? Material, labor, or expense account. So if for the material account, if that was getting all the costs related to materials. So for under this account, obviously direct material was also debited, intact materials were also debited. So for the direct cost, for the direct material cost, where it is going to be then transferred into in the second stage, it is going to be transferred into work in progress account. And then what about the other costs? Mhm. So what about the other costs? What are we going to do for the other costs? We are going to transfer them. If they are related to the production overhead, then we are going to transfer them to the production overhead account. Very easy. So production overhead costs are transferred then to the production overhead account. All production overheads are transferred to the production overhead account. Very easy. And then what about the non-production overheads? These are transferred to the operating expense account. Operating expense account are also known as non-production overheads. So all the non-production overheads are transferred to the operating expense account. Non-production overhead. Let me just bring it up here. Right. So let's just mention here that this is the second stage. So this is the second stage, right? So in the first stage, you are going to post the cost item in the material account or labor account or expense account. In the second stage, all the direct costs are going to be transferred from these three accounts to the work in progress account. And all the production overheads are going to be transferred to the production overhead account, and all the non-production overheads are going to be transferred to the operating expense account. So these accounts are going to be emptied, you can say. What does this arrow mean? I can just copy it here. The arrow sign means transfer to or debited to. You have to remember this because it will make things very much easy for you. So the arrow sign means transfer to or debited to. So for example, all the direct costs are being transferred to or debited to work in progress account. So you will be seeing that for all the direct cost item, you will do this. For you can say most of the other transactions. Most of the I think for till the transaction 8, we will be are related to this stage. Even 10th transaction is also related to this stage, second stage. So yeah, so let's just do it. So let's start the fourth transaction. So fourth transaction is that material were issued to the production department. So now before this transaction, before the fourth point, material were in the warehouse, right? So now they are being issued to the factory, to the production department, and 7,000 worth of DAG material and 2,000 worth of indirect material. How do they know this? It is written in the material requisition note. So obviously the description of the material would be written, and from that they will know that that 7,000 worth was DAG material and 2,000 worth of indirect material is what the production department is ordering. So you have to understand this stage. If you just understand this concept, the double entry becomes very easy for you. So let's now come to the double entry. So what was the double entry? We are transferring the direct cost to the work in progress account. So obviously work in progress account is a type of expense account. So when expense increases, we debit it. So debit work in progress account. And then obviously we in this transaction, direct cost is increasing, right? And also indirect material is also being issued to the production department. So obviously our production overhead is also increasing. So why not non-production overhead? Because material cannot be non-production. Material must, the definition of the material was materials used in production. All the costs related to materials used in production. You can check it in the cost classification chapter and cost classification by element. So there I have written the definition of the material classification. So it was material that was used in production. So obviously production is a criteria for the material cost. So obviously we cannot transfer the material into, so a material cost cannot incur in any of the non-production department, right? So it will be classified as expense. So for example, stationary cost, it will be an expense, not a material cost. So material cost is only related to the production. So 2,000 will be transferred to the production overhead. 7,000 will be transferred to the work in progress account, right? So EBIT, production overheads, and then credit. Where is it coming from? Where the all the costs are being coming from? They are coming from the material account. So we are going to credit the material account. So by what amount? The debit amount, the direct material amounted to 7,000, right? This written in the transaction. 7,000 worth of direct material and 2,000 worth of indirect material. So the amount that we are transferring to the production overhead is the $2,000, and credit material 9,000. Right. So now let's post this transaction to the T accounts. So debit work in progress. Work in progress account is being debited. So obviously we are going to use the debit side or left side of it. So we can just write the amount 7,000. And what do we have to, which name do we have to write here? Production overhead or material? So if work in progress account is being debited, then we must write the name of the opposite account that is being credited, right? So which account is being credited? So it is material account. So we have to write the name of the material account here. So you can say that the work in progress opening balance was 2,200, and then material was transferred to the production of worth of $7,000. So now we have also used the production overhead account here, so we can also make that account as well. Finished goods account, we won't be needing it right now, so we can take it here. and create another account here named as production overhead account. So what does this account do? This account gathers all the production overhead costs incurred in the period. So the production overhead has been debited by 2000. So we can use the debit side, left side 2000 and write 2000. And what name do we have to write here? We have to write the name of the opposite account. Opposite account that is being credited. So obviously material account is being credited. So we will write the material name here. So we can read it as that production overhead in production overhead has been increased by 2000, which came from the material, which were the indirect materials, right? So this was the fourth transaction. So now let's go to the fifth transaction. So what is being done in the fifth transaction? Unused materials were returned to stores. 600 worth of direct material and 400 worth of indirect material. So in the fourth transaction, warehouse was sending these materials to the production department, to the factory. In the fifth transaction, materials are now being returned to the stores, returned back to the stores from production department, from the factory. So obviously transaction will just be the reverse of the above transaction. So material is now being increased in warehouse. So we are going to debit the material account, and then we are going to credit from where it is coming from. It is coming from work in progress account or from production, you can say, and some of it is coming from the production overhead account. So what is coming from, which amount is coming from the from the work in progress account? So it is 600 worth of direct material and 400 worth of indirect material. So obviously we are going to write the 600 in front of work in progress and 400 in front of production overhead. So total amount that is being transferred to the material account would be equal to 1000, right? So you can see at the top debit is equal to credit. So we have not made any mistake here. So we are going to now just post this entry to the T account. So we have to debit the material by 1000. And how are we going to debit it? Because now there's a problem. You can see what problem is that I told you that you have to write the name of the other account that is being credited. So now the problem is that there are two accounts that are being credited. So how do we write this transaction in here? So we will use both of the names, right? We have to debit the material account by the total of $1000. So we will debit it in two lines. How? So work in progress, I will write here, and then the production overhead, and then we will write 600 in front of work in progress and 400 in front of production overhead. So in these two lines, we have debited the material account by the total amount of 1000. So this is how you do this. So now let's post this entry to the work in progress account. So work in progress account is being credited, meaning that we are going to use the right side of it. So by what amount? $600, and we have to write the name of the opposite account that is being debited now. So that is material account. So we'll just write material here. And then production overhead account, it is also being credited. So we will write 400 in front in the credit side of it, and we will use the name of the opposite account, which is material. That is being debited. So that was all. This is the up till the fifth transaction. So I hope it is very clear to you. This topic is going to be ended once we have come to the seventh stage. We have completed the seventh stages of the cost accounts. So this is going to be a very interesting topic, very interesting thing for you, because you are getting to understand the journey of each of the cost item throughout the accounting system, and being ending up to the financial statements, statement of profit or loss, and statement of financial position. So for the next transaction, I will record another lecture, because it is going to be a bit more tricky and different, and it will take some of the time, some additional time, this transaction, because different calculations are going to be done in there, right? So let's meet in the next video. Allah Hafiz.